Hey guys, let's do a weekend review. I switched over to the 200,000 Gauntlet Mini, and this will give me more wiggle room the way I trade, um, allowing me more flexibility with my style of trading. And it worked out pretty well until Friday, and I'll talk about that. I hit my profit target. Didn't, do a, perfect trade week, but was able to stay within the guidelines, follow the rules, and maintain my consistency, which I think is the important thing. So I'm trying to, stay within that profit target amount, which was $733 initially. So I had a profit goal of 11,000 to complete the challenge, and that's in over 15 days. So if you take that, 15 days and divide it by 11,000, you get $733. So I was able to meet my profit target each trade session of the first 5 days, including Friday, and then at the almost Friday. So I was a few points shy of the profit target. But I think it was around $711, real close. And then at the end of the day, I made a mistake, went back in, tried to capture, the difference between 711 and 733, and the market tanked on me. And we'll take a look at the charts in just a minute. And instead of letting it go and taking a little bit of a deeper loss, I martingaled in and tried to, add. I put 5 contracts on it, and then made a real big mistake, and ended up losing $200. So live and learn. I'm not happy about it, but especially we'll talk about, where the error came in with my analysis of the market, and I fell into a bear trap or bull trap on Friday. So live and learn. That won't happen again. So, but I did stay within the guidelines, so I am happy about that. I will be able to recover my 30% is getting a little bit challenged now. So I'm going to try to hit the $783. I'm going to, move my profit target up between 783 and 800, to be able to complete my 15 days, and you know try to get this in line. So I think if I move it to 800, it may bring this out of line for just a couple of days, but then overall after the next 10 days it should flatten out and put me back in my 30%. So so I've got a little bit extra work to do. So my profit goal will be increased a little bit because of the mistake I made on Friday. So um, that's okay. I can certainly, try to complete the challenge. I am able to now improve my number of contracts, so that should be able to help me. Can go from 5 contracts now to 7, between 1,500 and 3,000. Once I get over 3,000, um, I'll be able to go to 10 contracts. Uh, and that won't be long. I mean, I'm right there almost at 3,000. So I would say sometime on Monday, I'll be at 3,000, and I can increase it from 7 to 10. And that gives us a lot of flexibility. Sorry. Um, you know, Being able to hit your profit target goes from, having to go from 10 ticks at 7 contracts to or 10 ticks at 7 contracts to 7 ticks at 10 contracts. That's sort of a mouthful, wasn't it? But if I wanted to trade all 10 contracts at one time, then I only would need 7 ticks. If I wanted to trade all 7 contracts at one time, I would need 10 ticks to hit the profit target. Um, actually, my profit target is not that much. I would need 783. So let me go back here. So let me go back. Let me um, let me reset this real quick. One minute. So this is going to be unbolded. Here it is here. So this is my goal. 9 ticks and 6 ticks. So that's a little better. 9 ticks and 6 ticks. I like when I hit 10 contracts, all I have to do is get 6 ticks and I'm done using that 10 contracts. And again, how you get that, you certainly want range expansion and you want volatility rising before you even attempt to go in and capture that take profit. You certainly don't want if you're going to be using many, many contracts. If you don't have the volatility, if the volatility is compressed, you don't want to try this unless you're at a support resistance level that is rock solid. And we'll take a look at a couple of those. Um, but certainly, if the volatility is low, you want to be trading with just 1 or 2 contracts. You don't want to be putting a lot of position size on with a low volatility range contraction environment at all. That would be suicide. So, having an understanding of volatility is going to be paramount. Um, Going into next week, there is not really any data that's going to support the market. We've got core durable good orders that might give us a little bit of volatility Monday, um, but the big number is going to be on Wednesday with ISM manufacturing and the big opportunity because that can set the tone for the entire month. And then, of course, the non manufacturing on Friday for the NQ. So I'd like to, pick my spots and trade with VIX. VIX on Friday hit the weekly one and came back down. So these daily, weekly levels work on the VIX just like they do with the ES. Here is a quarterly uh, distribution and monthly on a daily chart. And you can see this little tan line is the monthly one at 39.37.25. And the orange line is the quarterly one at 39.23.75. So we've got a daily range of 59 points for the max range. And we are about 40 points, so we're within the daily range of the monthly one and quarterly one. And this is where I expect price to bounce back up. So what happens is the dealer will put their risk on the monthly one. And so they're wanting price to stay inside of it like it has been all month. They don't want to move their risk 2 days before the end of the contract. And price will normally come to test the area, get it going into, the end of that period. That's how it works. So you get to the end of the period, you're going to be looking to see if you're at, a 1, 2, or 3. Um, so if they have to move their risk on the last day of the contract, that's going to cost them a lot of money, right? So that usually won't happen. The contract expires Tuesday at 5 o'clock or 4 o'clock Central. So 2 o'clock, Tuesday, 4 o'clock Central, all bets are off. It can tank and start selling off. The quarterly one is not going to be impacted until March 16th. So there's time for them to move their risk, and they'll probably move it, down to this 35. Well, I don't know where they're going to move it. They're going to move it lower. Probably a monthly or, um, a different level. I can go through that in a different video, but just to suffice it to say that I believe that they will not want to move their risk before Tuesday. So I will be looking to see this bounce around 39.37.25 or 39.23.75. And that is upheld by my daily range for the VIX. If I change this from the 30-minute to a daily one, we'll see that I have a dollar 30, right? 1.3. It's actually 1.3. Let that calculate and you can see it. And there it is, 1.37. That's on a 30-minute. If I put it on a daily, it's 130 on a daily bar. So between 130 and 137. Did my range increase a little bit? I guess I did get a little pop in my range. All right, so it's 137. So that means 137 points on a 14 period um, ES range. So 14 bars, 137 points. You can see that we're below the mid band of the Donchian. So I know that we're already overextended. From the high, 41.88.25. If I get my calculator out and take 130, that would be, what happened? Hang on. 40.51.25. So this is how far away from the range we are. We're oversold. But if we were to take the 137 from the midband at 40.68, that would take us down to 39.31. right there between the monthly and the quarterly. So there's another reason to be looking for, dip buyers to be stepping in right there. And that might be a good place to throw, some trades on to go long, especially waiting for that Tuesday close. So at some point on Monday, if it's not even Sunday night, uh, look to, enter something long down here. And that will be my trade plan going in for Monday and Tuesday. I've got something exciting to show you. See how we broke down below the ones, the weekly ones on the daily, on the, excuse me, the ES regular chart, not just the VIX. We hit the weekly one here also, just like the VIX did, and sold off. Um, Here was a bull bar that I got faked out on because I thought it was going to make a run to get back into the daily ones, or at least touch the daily ones. And that this is where I got trapped in here and just handed my shit to them Friday afternoon. Don't do that. So live and learn. But here is something that's exciting for you. I have broken down the ranges. So I've got 7:30 in the morning to 8:30, 8:30 to 9:30, 9:30 to 10:30, 10:30 to 11:30, 11:30 to 12:30, 12:30 to 1:30, 1:30 to 2:30, and then 2:30 to 4. So instead of 2:30 to 3:30, I went ahead and took it to 4. To the new daily close no longer is at 3. It's actually at 4. There's not anything that happens between 3 and 4 unless there's earnings, but the daily close technically is at 4 p.m. Central now. But and I've got the daily 123 listed here on the chart. So I know with a high degree of probability if I'm in low, medium, or high vol, what to expect for points during an hourly time frame. So when I come into my report at 7:30 in the morning, I've got my distribution when it opens. I'll get a new opening distribution at 7:30 in the morning, and then I can trade my 123. So you can see we came in at 7:30 in the morning on Friday and sold off. We hit the 1 right away, then the 2, and then the 3, and it actually went further as the day progressed. But this 7:30 to 8:30 time frame, put a vertical line at 8:30 right here. So between 7:30 and 8:30, we went down. Um, I have tails on my indicator, so all you have to do is hit your fib, and then you can put whatever you want for your tails. And I just use some basic, numbering to allow me additional levels to hit. I want to hit a target like the side of a barn. So it went down two of my levels and then almost to the third and flat came back in. But that's for your first hour or the 7:30 to 8:30, and then we go into the open. And then here's the open. We popped up a little bit, hit the 1, and then turned around all the way back to the opposite one. And so if you're in a bear market and you see that you've popped up over your first standard deviation, you could either try to hit the 2 or wait for that reversal going back down. And let me put a 1 minute on this. It might be a little bit easier to see. So at 8:30, right here. This was a big bear bar on the first standard deviation, and it went down, you know, to the next first standard deviation. So there's 17 points, right? So if you were looking for a bearish setup, knowing what we know about these bell curves, this is what I do is I try to get my trades on these levels and bounce off of my standard deviations on this custom time period, my opening range time periods, whenever possible. So just like your weekly, daily, or your you know other higher time frame, your quarterly, monthly. I can do hourly. I can do Globex. Um, but I can also do a custom time period for the actual 14 periods of every 8:30 to 9:30 time frame. Put my bell curve on it and know how many points and low, medium, or high volatility. So I would know that at least I would be looking for 20 points, right? 19.75 for a medium volatility environment. And that gives us, a lot of, edge. So I know that the range is expanding or contracting, expanding, contracting. So when the range is contracting, you don't, expect a breakout. This was past the 8:30 to 9:30 time period, but just to give you that example, looks like that was being pinned right there, and then finally it popped back up, and you can just follow your envelopes, or your opening range um, bell curves, and try to go in um, and capture the range that's available for you during your time period, 10:30 to 11:30, 1775. So that's when you can get your ruler out and have a game plan of trying to see, well, the range has been hit and we're only in medium volatility, so I'm not going to try to get anything more. There we go. You know what I'm trying to say? We hit the probability, so there's no reason, and if it's a medium or low volatility environment, there's no reason to start trying to break a range, right? We reached the probability for that range. And we also hit the 1, 2, 3 for that time period, that custom time period. There's your 1, there's your 2, and there's your 3. And then the range was contracting at that point. Another reason not to try to go any higher, right? And it came back in to the middle of the range, the RTM trade, and it bounced actually on the 1, but that was for a different time frame. That was from 12:15. So your 11:30 to 12:30. It went down. It opened, came up a little bit, but then turned around, hit the PT2, the lower PT2, and then went up to the upper PT2 later, 2 to 2. But you know, here at this is lunch. I probably would not be trading that, so I don't even know why we're looking at it. But here's your 13:30 to 14:30. Again, flat. I'd stay out of that. But here is your opportunity for that last hour of trading, your power hour. And this is helpful um, to just an idea of what your range opportunity is and compare it now to your actual bell curve. So here was 1550 points, and if we look, you can see that we were at 1450. So we hit the 1450, right? Target reached. You just stopped trading, right? Target was reached. Okay. So I've got this template. Anyone that's got the PT indicator, if you'd like this market analyzer template, I've got the daily range on here too. So we can measure now from the daily range. Um, so February 24th, we can see that we had a daily high of 40.23 and a daily low right there, 75.75. You can see we went over the daily range of 59. So it ended up closing. We were oversold, and then it came back in. It came back in just to be within the daily range. So a little bit more. So popped up a little bit more, up and down. It was really going up and down too because we hit that 59 and kept going up and down. It was quite spiky, and I screwed up I got chopped up on this bar right here. All right, so late in the day, on a Friday, I should have known better. Here it was, this disaster that I got involved in. I thought for sure it was going to pop up even higher, and I screwed up. We did pop up Thursday. I mean, in my defense, the prior day popped up nicely, see? But we were already going long vol, and we were here going short vol, so. And the VIX was not cooperating. The VIX was also going down, and I didn't have the VIX on. So, um, anyway, live and learn. I have plenty of time to make it up. And I got through a week without blowing up. So I call it a victory, right? So don't blow up your account. Stay in your lane. Follow the guidelines. 10 more days to my path. Follow the progression ladder. Um, you know, Trade during the approved times. Maintain your consistency. You can see that I'm doing that. So I really do want to stay at this $783. Um, I'm almost at 30%, so I think 800 would be okay, but so I'm going to kick up my profit target now to 783 for 10 days. I could probably increase that a little bit, one or two times, and bring this in line, and so that I can complete the challenge within my 15 days. If I need 16 or 17 days, that's okay. Don't push it. Don't, mess it up. If you do get outside the maintain consistency rule, they're not going to violate you, but you just have to keep trading until you get it down inside that 30%. So you want to try to stay around it as much as possible. Be sure to adhere to this rule. So they just don't want you to take all your profits in one day. They want to see that you can trade consistently throughout the program. And so, if you need a couple of extra days to be able to stay within the guideline, that's okay. Get your funded account, get past your profit goal in the funded account, and you're wide open. You no longer have the rule for your trailing drawdown goes away, your end of day drawdown stops once you complete your profit target, and once you it will no longer be rise, right? So then you have a capped um, drawdown level. Anything above that, you're scot free. So just stay, get to the point where you've, reached your maximum drawdown, and then anything above that, you're, wide open to be able to trade without having that rule in place anymore. So, um, and the maintain consistency rule is no longer applicable in the live account. So, um, that also will not be a factor, I believe. It does not apply to the live accounts. So, this is just for the challenge. So, yeah, I'm real excited about it. I love this extra flexibility. If you would like to get my template, just shoot me an email or Skype me. Um, and I can give you the market analyzer broken out by the time periods. That gives us the points that we can expect, the range to be in. And get the VIX if you're trading the ES. I can give you, I think I've already put the template into the training room Skype for the VIX template. And if you have the opening range indicator, the JATS opening range indicator, I can give you my templates that already have them broken down by time period. This is fantastic. Um, this is, to me, really, really nice to have the individual volatility envelopes. I can give you the template for this. Um, and if you would like to sign up for the Gauntlet, just go over to my website and click the link, and you can join the career path or the Gauntlet Mini. Um, the career path has a sale going on right now, and believe the Gauntlet Mini. Here we go. Is also well, that's the trader career path. Let me see. I'm on the wrong page. My apologies. Here we go. Something is not right going on. Here we go. So sorry. Um, you can sign up for it here. It actually does have a little bit of a sale going on also. So take advantage of your discount and be sure to read the rules, understand what they are, and I'm enjoying the 200,000 one. It gives me a little bit more flexibility, and um, I think I have found the right one for me. You might enjoy having the smaller targets to hit, and work that out at a lower cost. All right, guys, thank you so much. Let me know if you have any questions, and I'll update my progress at the end of the week next week. We'll talk to you later. Thank you.